Happy Monday, folks. Anthony Speciale here with Speciale Analysis, unedited and on the edge of the market. So, as we normally start our week to week, we are going to cover our major market analysis. Now, last week was, I don't want to say anticipated, but we have been telling you to be leery of buying the market. We have been experiencing over the past several weeks what we would consider a relief rally or a short covering rally. So, when the market is in a trend, typically there is counter trend movement. So the market is in fact trending down. We've showed you that over and over and over again. But with that, there are counter trend movements, and that comes from relief rallies or profit taking or short covering or whatever you want to call it. But a natural course of a trend is an impulse followed by correction followed by another impulse, defining a direction. So let's open up the chart. We're going to walk through our major market analyses, and tomorrow we're going to talk about some trade ideas that have set up, new trade ideas that have set up. So pretty excited about that as too. But let's jump in, see what we have for today before we get ahead of ourselves. All right. First up, Dow Jones Industrial Average. This is the YM futures contract. You can see past couple weeks, market came down. We had some retracement. We hovered around an area that we knew was an area of indecision, meaning we were not sure who was in control, buyers, sellers. And until we get a confirmation in one direction or the other, there's really nothing to do. That's simply what it comes down to. We sat aside for the past couple weeks waiting to see what would happen. So you can see price popped, stalled for about a week, and then this past week it just basically tumbled below where it had broke from where it found support. So for the overall week, we lost about 1,529 points. That's fairly significant. I mean, the trend is still in the downward motion. It's not changing. We just need to be on the right side of it when we do decide to take some action. Next up, NASDAQ. Ticker NQ. Same thing. Impulse, correction, impulse. Short covering, consolidation, correction, whatever you want to call it. Price popped up, stumbled again for about a week or so, and then has now failed. So we have got a new confirmation to the downside. Continuation of the existing trend. The trend we are looking at is we are in a downtrend. We broke that trend here, which we were able to start identifying, and then you could see it had steepened. So buying this market on the on the pops is probably not ideal. We would prefer to sell them as they continue to break lower. Next up, S&P 500 ticker ES. Similar impulse, big correction, impulse, small correction. That same bit of consolidation, and then price has now failed again. So noticing that this key area that we've been watching that found support, is now acting as resistance once again because we continue to break through it. This 3,900 area is key for the S&P to hold. If it breaks, if we see a break below this in the next week or so, we could tumble into the, low 3,000s, 3,200 area fairly quickly. So this could accelerate much faster than we anticipate. So just sit tight. I just want you to be aware of it. Don't be afraid. If this gives us an opportunity to go to the downside, we could make a lot of money. So don't be discouraged. This is in my eyes, this is all fresh, new opportunities to look at. Russell 2000, similar. Impulse, consolidation, impulse, consolidation, impulse. Maybe a little correction. Maybe there's a little correction here as well. But we are, again, exhibiting some form of weakness. We do have some support here. I'd like to see, this next week close below it. And if that does happen, there's some significant downside to come across all the major indices if we continue to break lower on a week-to-week basis. Gold futures. Little impulse to the downside here, a little correction. We continue to test this channel as resistance. Resistance, resistance, resistance. We had a little strength come in based on that selling that we experienced this past week, but it hasn't exhibited us any opportunities to really trade. The overall trend at the moment is down. We have a series of lower highs and a series of lower lows. So if this does hold, there is a potential for gold to fall. Now, gold is not trading as inverse to the market as we anticipated to. Why? I'm going to show you that in a minute. But the gold has not been the hedge that we've been looking for. Normally, when the market exhibits weakness, we get these big, crazy spikes in gold. We're not seeing that this time. Where do we think that is going to? Well, I'm going to show you right now. We believe that all of that is gravitating towards the dollar index. This is the dollar index, DX. Ticker DX is the future symbol for the dollar index. We were looking for a breakout above the COVID-19 highs. That's what this represents right here. This is COVID-19. This is March of 2020. See this huge spike up. So we're looking to get a 1% confirmation above that, which we haven't gotten yet. But we may get it in the coming week. You can see price had broken out. Offered us about, 0.63%. Not what we need in order to entertain trading it. In fact, we were kind of running right into some form of resistance. Now, what do we have right now? Some impulse, consolidation, impulse, correction, and we're starting to impulse again. If we get that break out of this resistance area in next week, we could go higher. Where do we go higher from here? So I have to zoom out to get the big picture in motion here. Here's the dot-com bust. This is 2000. This is the Great Recession, 08-09. So you could see representative to big spikes or big topping patterns in this market. It's around significant things that have happened. So what am I looking for? If we do break here, we could go up to the 110 area. That's what we'd be looking to trade the dollar index towards. So if the market continues to exhibit weakness, which it looks like it may, the dollar seems to be what's finding strength. So this continues to climb. We'll be looking for some very significant, essentially dot-com bust, 2000 pullback type of resistance at 110. So that's what I'm anticipating and looking at right now in the dollar market. And this is where the strength is going. It's not going into Bitcoin. It's not going into crypto. It's not going into gold. Inversely, as the market exhibits weakness, the dollar index is exhibiting strength. So market weakness, this pullback was inverse of the short covering or relief rally that we just experienced over the past couple weeks. Market sells off, dollar index rallies. This is what is trading inverse of the broader markets right now. Last but not least, Bitcoin, US dollar, still exhibiting weakness. So we took a great short opportunity on a closed Friday below this channel. We traded it to here, a little bit short. Obviously, we always give it a little bit of a buffer, but price action had literally come right to the area that we identified. So we're very proud that our analysis is working. And then we've stayed out of this market. But you can see that it is just drifting lower and lower and lower. So cryptos are not trading inverse of the overall markets. Cryptos, in fact, are exhibiting weakness like the broader market. So we're going to be watching these carefully. Now, tomorrow, when you come back to watch tomorrow's video, we're going to discuss our positions. We're going to discuss some potential opportunities on the indexes themselves. We're also going to discuss a handful of opportunities that we have been watching and are continuing to transpire. I think the most recent loss we took was on Citigroup for like 3.5%. I mean, it was very, very minor. We've been really disciplined about staying with the trend, and it's been working out really well. So we were putting on a bunch of trades, a whole bunch transpired, a whole bunch are still working for us. A couple we got stopped out of. I think our biggest loss was 3.5%. One or two was at break even. And we have a few more that are still working. And now that this market is pushing down, we have the opportunity to capitalize on the shorts that we have had open for the past couple weeks and initialize some brand new ones. So with that said, make sure you come back tomorrow. Make sure you open the email. Make sure you watch the video because there's lots to talk about. So with that, as always, I appreciate you for being here. I'm humbled you took the time out of your day to join me. If you could do me a very simple favor, that is below this video, like, share, and subscribe to it, I would appreciate it. I just want to share this information 100% for free with as many folks that would like to see it as possible. So again, I appreciate all of you. Thank you, and I look forward to seeing you tomorrow.